Welcome. Good morning, good evening, good afternoon, wherever you are in the world. Welcome to the Q3 2025 Sky Quarterly Trends Report. We've been doing this now for nearly 70 quarters, over 15, 16 years. We have a very unique data set for those of you that have joined us before. Client data aggregated in the billions of dollars across 15 quarters. Retail media, paid search, social advertising, like I said, in aggregate, helps people benchmark their own results. They see CPCs rising as the rest of the industry seeing CPCs rising. They're thinking about dropping spend in some areas, maybe changing the share of ad format spend in a particular channel, and they want to see what other people are doing and what your peers are doing. And so this is a pretty good test of where things are in the industry, as well as some kind of tips and tricks and recommendations and best practices to take some of this data and then optimize your own programs and efforts accordingly. Before we get started, we have some housekeeping information. Of course, all of you all are in listen-only mode. I hope so. And if you have any questions, go ahead and click the Q&A button. My colleague Julia, she's standing by. If you have any technical issues, generally just restarting the Zoom will help. If you're having audio issues, maybe sign up via the telephone versus the computer mic and speakers. But other than that, we have a pretty good stable platform here with Zoom, and happy to be on here. Um, we don't issue the slides for the QTR, but we will be putting out a report like we always do next week. For those of you that signed up for the registered for the webinar that are here. And if you're not here, if you're listening later, you'll get a link to this recording, as well as next week a link to where you can download the report and go a little bit more in depth into everything we've shared. My name is Josh Dreller. I'm the Senior Director of Content Marketing here at Sky, and I am joined with our friend Will Margaritas. Will, could you please introduce yourself to the group?
Yep. Hey everyone, I'm Will Margaritas. I am the EVP that oversees commerce and retail media for the US at Dentsu. I think I've also been doing e-commerce for about 70 quarters, give or take, and thrilled to be here talking through this today.
Thank you so much. Can't wait. Um, and if you like what you see here for the QTR, you can look back at other QTRs on our website at our research center. We also have our State of Retail Media Report, which we're actively surveying right now for our fifth annual one that will come out in Q1. But there's also custom research. We do consumer surveys. We do all sorts of marketer insights. So check us out at the research center if you want to get some more information. As I mentioned, we have billions of dollars in aggregated spend across retail media, paid search, and social advertising. This particular QTR is drawn from a population of 1 trillion plus ad impressions across 8.6 billion clicks and that $8.9 billion in spending over the 5 quarters. Unless noted, all of the data you're seeing here is what we call same store growth. So it's advertisers on the Sky platform that we're spending for all 15 quarters of this analysis. So that way we can really see kind of apples to apples. What are we going to do today? So we're going to jump in. We're going to look at commerce media from a high level, what happened in Q3, as well as some long-term trends. We'll do a deep dive into retail media, as we always do. Prime Big Deal Days, technically not part of Q3, but has some really interesting stuff we want to share for those of you that are putting the final touches on some of your holiday promotions. We'll touch on paid search and social advertising, which is part of commerce media. And then we'll dive into our AI section, which we've been doing now for a couple quarters, and finally looking ahead at the rest of this quarter and what's happening next year. Well, let's get started here. So we like to start off with a little news and notes. Marketers are generally really busy, heads down. Sometimes you miss some of these milestones. Maybe not earth-shattering ones, but good things kind of to keep an eye on and know what's going on with the industry and larger trends. First of all, eMarketer upped its global ad spend projections from the beginning of the year up to 1.17 trillion. Not a huge bump, but that's nice to see that throughout the year they're not seeing signals that things are dropping, that they're going up. That's really pointing to a healthy industry. Prime Day in July drove $24 billion in total US e-commerce spending. So not only is Prime Day itself such a big thing, but it's now kind of with a halo effect, drawing more people to shop at other places. We saw big sales from other retailers. So it's really become the Q4 outside of Q4. AI, obviously, big topic for everyone. Google AI overviews now reach 2 billion users monthly. Will, what do you think about, AI results and how this has changed the Google search engine results page?
It's 2 billion is a crazy number if you think about the percentage of the just Earth, right? That's about a quarter of everyone is now a Google AI overview user on a monthly basis. And if you think about your own usage, I'm sure we're all using it in some ways, and it's replacing going to websites for a lot of us. So it becomes very much thinking about how can we actually utilize the algorithm driving the AI to our benefit? How can we get ahead of the machine learning and be creating content in the correct way that Google's actually highlighting what we want it to be highlighting about our products and that we're the source that they're looking at. And I think that's only going to become more and more common and necessary. It's going to be not just about marketing to the consumer, but about marketing to the different AI implementations.
Yeah, and it's actually gotten better, I feel like. It's gotten better over the months. It's probably going to even get better. I remember when Google used to just be listings, right? Listings on a page, ad and organic. And they started talking about how they're going to make the SERP richer. And it started with things like movie times and flights, and then shopping campaigns. And then now with AI overviews, I mean, you really get a very rich experience on the search engine results page at Google that you didn't have before. Uh, which is also a challenge for some that, some traffic is dropping around the internet because people are getting to Google, finding out what they need and not necessarily needing to go to the next step. However, that's the evolution that we're all dealing with, and we'll talk about that in a little bit. What else happened? Q3 Prime Video, the ad-supported tier reaches 130 million US. As we know, last year was the first year that CTV eclipsed television in terms of ad spending, and that was the first year that ad spending went down. And when I say CTV, Prime Video, online video, should I say, then not just CTV. But just a big thing, and just the fact that this is not just streaming, this is ad-supported streaming. So that gives advertisers a really good chance to get in front of people. TikTok keeps bursting along. Last year, big announcement about TikTok Shop, how much revenue is generating. Recent announcement up 120% year over year, Will. What do you think about when you think about TikTok Shop and how big that's come in such a short time?
Personally, I think TikTok shops are just insanely exciting. Even just honestly, I'm addicted to watching YouTube videos that are people buying the first 10 things TikTok recommends they buy through TikTok Shop and reviewing it. It's become the Wild West that we thought e-commerce in general was for a while. But think back to that Google AI overview and how it's keeping people on Google. One of the places that people are not staying on Google for is TikTok. So it's still a phenomenal opportunity to keep talking to consumers. TikTok shops makes it much easier to sell to consumers for them to click and buy and get it on their doorstep. And I think we've seen a lot of small brands really engage with it. And there's still a lot of growth opportunity as big brands continue going from dipping their toe to building full strategies around TikTok shops.
Yeah, it's amazing how things have changed, especially where we saw TikTok a couple years ago. Remember, it was up in the air whether we even have it in the United States, and now it's become this big juggernaut for commerce media. And then Threads hit 400 million monthly users, plus monthly users. I'm not a big user of Threads, but it's interesting to watch. And for those of you that may not be using it, to know that it's becoming so big and an opportunity within social makes sense to talk about. All right, let's dive into Q3 2025 commerce media. Commerce media itself is an interesting phrase. I see it defined different ways. We certainly define it a certain way at Sky. Will, at Dentsu, when you hear the term commerce media or a client asks your team about commerce media, how do you talk about it? How do you think about it?
It makes me laugh because I feel like every time we're talking to a new client, we even have to reframe what commerce means because it's such a broad term that can incorporate so much that sometimes it might include social commerce, sometimes it might not, sometimes it's Google PLAs, sometimes it's all Google search. With commerce media, especially when we define it internally, we often mean any media network that is being driven by first party data and sales data. So you think retail media networks are attached to retailers, but we generally extend commerce media to include hotel chains or airlines or credit card data. So they don't have a retail storefront, but they still have that rich data that can be targeted against. So generally, that's what we think of as commerce media internally. But as I mentioned, it's such a broad term that we like to level set in every discussion that we're having.
So yeah, I'm wondering what our viewers are thinking about in terms of the marketers sitting across watching this webinar. What you think of commerce media? It's an interesting thing. It's interesting unfolding. It's certainly becoming moving from like bleeding edge buzzwords to more of a mainstream term. So it'll be interesting to see how it moves. For us here at Sky, we think about the commerce ecosystem, driving shoppers to retail sites using commerce signals to buy and decision upon advertising, whether on a retail or on social or on paid search. So yeah, this definition will evolve, but ultimately, I think it speaks for itself. It's media within the within the commerce landscape. So we'll see where it's going. But for us, that means retail media. First of all, it's kind of the keystone of this entire thing. As you can see from a long-term trends, just keeps going up and up, keeps growing and growing. Real quick note about our indexed charts. So when we do index charts, of course, we can't share necessarily some of the actuals. We have agreements with our publisher partners. We just can't share that actual stuff. So what we do is we index it for the first quarter of analysis. In this case, for our long-term index trends, 2019 Q1. And so while clicks and spend obviously aren't equal, at the time, clicks is being whatever clicks were in 2019 Q1, we're indexing at 1.0. So from everything that goes up, when it goes to 2, when it goes to 3, you can see it doubling, tripling, et cetera. So just know that when you see clicks here in the blue line and spend here, that's their in reference to themselves and how they're indexing across that first quarter of whatever the chart is. So enough with the analysis, but just as you can see, it's not hard. You can look back, kind of squint, and see that retail media is growing. Will anything pop off the page for you?
I think what's interesting is there's a lot of talk about retail media hitting maturity, and it absolutely is as far as capabilities go, as far as understanding go. It's much further up that maturity curve. But as you can see, growth, it's still growing like it's brand new. It's still booming. It's still obviously much bigger as far as growth goes to many of the other channels. It's shifting a lot, but it's just absolutely booming. That's the way to think about it.
Yeah, and we've seen auction-based media from search, then to programmatic, then to social, then to retail media. You always think, the auction really dictates some of these dynamics. And to see that we're continuing going up and up and up, that just tells us that the auction is healthy. And another great sign that the auction is healthy. Look at this 6-year CPC trend. Yes, we saw some dips, some spikes, but all within a very, very narrow band of CPC. Will, and all this growth, 6 years of growth, this blows me away. I was there for Order Dog and Search and saw things, one year was a nickel to get clicks, and then it was a dime, and then it was a quarter, and then it was $5. How have retail media marketers scaled up spend over 6 years, but managed to keep a really good tight cost per click within their programs?
And it is interesting too, because this goes back to 2019. So we're incorporating what happened in COVID and the lockdown here and seeing that it's still fairly flat. There were actually dips then. And a lot of this, I think, is that the tools for managing CPCs have gone really again, hitting maturity, but they're so powerful now. A lot of brands are just optimizing towards ROAS, and I think that's a lot of what's going here. Prices are not necessarily going up or going up all that much, and therefore CPCs are remaining about the same because brands are just making sure that they're hitting their ROAS numbers and keeping it fairly steady. If retailers want to increase CPCs, they've got to find a way to increase prices, most likely. Since that's not going to happen, I'd expect that CPCs do remain within this band in the near term.
Yeah, they haven't even gone up with inflation. So that just really tells you people are keeping these marketers all you retail media marketers out there, you're doing a great job of really keeping costs flat. And also, when costs are flat, you can do more things because you know you can predict what happens. If you see costs spike, you know you see the spike because it's not so dynamic, it's not so variable. Paid search. Once again, the mature stalwart of the digital advertising community, near and dear to my heart, just continues to go up even after 25 years. As you can see, quarter over quarter, year over year continues to go up. But unlike the retail media story, Will, we saw this flat CPC, rather flat CPC for many quarters. And then this year, we've seen it spike. We're still trying to figure out exactly where that's happening. It seems to be across the board. We do know that some of the social, the regulations around health and pharmacy advertising and social kind of changed and got a little stricter, and some of that money did come over to paid search, it seems. But that's an interesting push compared to retail media.
And one thing I'd speculate without seeing it directly, is this tied to AI? Is this really tied to more people are remaining on Google? Let's try to capture some of the eyeballs there as well.
Yeah, and maybe it's we know, generally branded terms, those are the low cost terms, more general terms where more people are bidding on tend to go up. So maybe part of this AI, revolution is marketers are having to kind of supplement traffic that was coming via Google now with some a little bit more paid, and with that becomes competition, and so prices go up. We'll have to track this quarter over quarter and see what's going on. With paid social, again, very healthy. As you can see, some dips, some spikes. We saw some things happen during COVID that were interesting, but man, things, especially since last year, are just going gangbusters here with social advertising. I think this also plays because with retail media, 80% of it is sponsored products, which is search driven, paid search, all of it search driven. So you're kind of at the uh, you're kind of restricted by the amount of searches, whereas social, you can drop, if you wanted to drop 10 billion impressions into the market in a week, you could probably do that very quickly. You're welcome, Facebook. You're welcome that if those impressions come your way. But I can imagine supplementing that traffic. That's where social really works well because you can push, whereas retail media, search traffic, search triggered retail media, paid search, or pull mediums. Social is a push medium, so you can really get a lot of impressions out there and spend a lot. And good news, we saw the spike during, towards the end of the tail end of COVID as marketers started to spend more. They had all these budgets they were holding on to. And then, of course, that drove up competition for CPMs. But look, 6 years, right in that narrow band between $5 and $7, and pretty low, pretty good value there for paid social. All right. After our long-term view of the different commerce media channels, let's dive deep into each. We're going to start with retail media, of course, and great numbers across the board, 21% year over year. And remember, this is all same store growth. This advertisers that have been with us and spending for more than 15, at least 15 quarters for this analysis. So 21% still double digit, mid double digit retail media spend. In line with that spending, clicks are growing around the same, driven by this insane click-through rate, which keeps going up and up, something we've seen this year. Um, and you can see just 2% higher CPC. We talked about how CPC has stayed very stable. What can we glean from this, Will? The fact that impressions are only up 2% and spend is so much up, clicks are so up. How do we make sense of this?
I see this as being the importance of being above the fold, right? To me, what this data is saying is that clicks are really happening on those top couple of um, products that people are seeing. They're not really going through, they're not going through the complete SERP. They're focused on the top. And that's really where this is coming from. So to me, this data really shows your dollars count more when you're at the top. We've known that for a while, but this just makes it really hard and cold to me that being at below the fold, being on the second page is nowhere near as useful as making sure that your products are showing up at the very top of the page.
Yeah, and we've seen this with search, any kind of search results media. I mean, whether it's Google search or YouTube search or retail media search, the top of the page gets the highest. It's like a web axiom. If you're at the top of the page, you get a higher percentage of clicks than as you go down. I remember I saw a paid search, a Google study at one time that said the top ad got 33% of the clicks, the second ad got 20%, and just it went down and down and down. So yeah, being at the top is a really important thing, and that's going to become more competitive over time. So looking out at spending 21%, but how did that go by month to month? And as you can see on the right side here, it was pretty even. This growth is really where marketers are this year, this 20% plus growth. And then look at July, up 22%. I mean, but still above and beyond the other months. Will, I mean, is that prime? Is that the Prime Day effect?
It's absolutely the Prime Day effect. And it's fun to think back when Prime Day started, and it was literally a day. It feels like Prime Day is now a week, and then we have the second Prime Day. Black Friday's expanded. I joke all the time with brands that at some point we're going to just have Cyber quarter of Q3 and then eventually Cyber half annual because it will extend down to July. But Amazon and other retailers are finding ways to create spending events all throughout the year, and brands that are aligning to it are definitely seeing wins because it's still working with consumers.
I keep expecting it, to just kind of drop a little because there seems like there's sales all year round. Like you said, there's two Prime days. They doubled the number of Prime days or quadrupled from the original number of Prime days back in July. We just had the October one. So yeah, it's amazing that we're seeing that. And of course, from that July spending with the 24 billion in e-commerce spending, not only is Amazon, driving these events, but it's helping other retailers too. So it's
There's a
become
huge halo lift, yeah.
amazing, amazing. All right, here's a an eye chart for you, quarter over quarter, key KPIs and year over year, imps, clicks, spend, CPC, click-through rate, which is hovering at such a good point this year. If we go over to this data, you can see year over year versus quarter over quarter, everything's up um, impressively. And then impressions, of course, on down quarter to quarter, but that's really because of click-through rate, how high click-through rate was. But Will, let me jump into your expert eyes as being a man in the trenches here. What are you seeing when you look at this data?
What's most interesting to me is absolutely looking at that spend level dropping in Q1 to actually be below baseline. Um, Q1's still very important. And yeah, there's a little bit of a holiday hangover, and I think that's where brands were going towards. But that hasn't been as true for consumers. We're seeing that, yes, they're spending a lot leading up to the holidays. But after figure January, they're getting back to spending, especially on the staples. There are still sales where they're getting good deals, only now they can look and see is that stick vacuum that they're looking at a good price because they remember what it was on Black Friday. We encourage our brands, our clients to avoid a little bit of this holiday hangover and to make sure that they're staying in the market, they're keeping their momentum when their sales and promotions are extending past holiday to push that. Make sure that they're starting the year above their goals. And that way, if we do hit a lull in spring, we've already got a position of power to be leaning into.
We did a consumer study, over 1,000 consumer survey. We do these a lot here. And I think it was something like half of the people surveyed, the consumer surveyed, said that they would be, looking in January to find deals for things that they didn't pull the trigger on during the holiday season. So yeah, that tells you the holiday season is extending, and we'd like to see maybe some more marketers do what you've done, what you tell your clients to do, which is treat the beginning of Q1 as kind of part of the holiday season, which I think is a really smart way to approach it. ROAS. So in aggregate, remember this is across all of our retail media clients spending for 15 consecutive months. Um, Really kind of right in the, once again, not really moving up and down a lot at a good sweet spot, even a little down now compared to where it was back in Q1. But ROAS can be a bit of a polarizing metric, especially in ROAS. I mean, especially in retail media, I've heard ROAS is dead. I've heard ROAS is more important than ever. ROAS is just another tool in the toolbox. Will, what do you guys think over there, Dentsu? What do you tell your clients?
So I've heard the exact same things. I've actually spoken with a client that tries to ban the use of the term ROAS internally. It's just another tool. I do think it's an overutilized tool. I think brands should spend more time thinking about their business goals, and ROAS sometimes does help you hit those goals, sometimes it doesn't. It's easy to say that from a distance, and it's always easy to plan like that when everything is going to plan. As ch it gets a little bit more challenging. We definitely see brands leaning back on ROAS. Um, but it is just a KPI. It's not the sexiest KPI. It's not the most exciting. It's good when times are tough, but there are other KPIs that can fit certain business objectives more. And we recommend that brands definitely have campaigns built around all different KPIs in order to be moving the needle more, in order to be pulling as many levers as possible.
Yeah, and I might pull my soapbox over here on the webinar and talk about measurement and some of the issues that sometimes are with measurement. And when you get so myopically focused on some of these metrics, yeah, it can kind of push you in the wrong direction. But I think as an aggregate for something like in this context of a quarterly trends report, when we're looking at multiple clients that have been spending for, like you said, 15 months across the quarters, the 5 quarters of the report, it's a good metric. It kind of gives us a good sense of our marketers, focused on this? Are they not? Where are they getting value? Are they getting return value? So maybe at the client level, individual advertiser level, yes it could be misleading. But I think from this standpoint, from back seen from here, to see that our clients are kind of keeping momentum at a good spot. And hey, every dollar you spend, you make $6. That's not a bad investment. I would like to find that investment myself on the stock market. If anyone has any tips, please let me know. All right, retail comparison. So this is where we really look at, especially, here at Sky, we have dozens and dozens and dozens of retail media networks that we're connected to. And so it's very interesting for us to see. And certainly when retail media started as a marketer myself, thinking about this portfolio approach, when social first started, everyone was all Facebook, but then they saw there's so much value if in places and spots, if you can really pick them. And for most of this, for the last 4 or 5 years, this other category beyond Amazon and Walmart has grown and grown, and now we're starting to see it shrink a little bit. Which kind of this was for me out of all the metrics within this Q3 2025 QTR. This was one of the slides that kind of made me stop and wonder. And so, from your expert eyes, Mr. Will, why do you think we've seen a decline in share of wallet across retail media networks that aren't named Amazon or Walmart?
One of my favorite stats in retail media right now is that since COVID, approximately 70 retail media networks have popped up, but they've combined only stolen about 1% of market share from or spend share from Amazon and Walmart. It's a lot of mouths popping up looking to be fed, and in most cases, they have separate reporting, they have separate billing, they have separate campaign setup. So if you're creating a tiny campaign and a tiny bit of spend, it's just as much effort as if you're doing a huge campaign with a lot of spend on Amazon or Walmart. And for a lot of brands, that made sense at first, but at this point, they're drowning in the amount of retailers that have their hands out and are asking for spend on their platforms and are offering some really interesting things, but they're lacking the scale, and it just becomes difficult operationally to be working across all of these different retailers. One of the main things that my company works with brands on is how to be more efficient operationally, how to be able to spend more effectively and measure more effectively across them. But we see brands that are spending on 30 to 40 different retailers. They have a small team internally monitoring it, and it just becomes more than really anyone can keep up with, and they instead gravitate back towards Amazon, Walmart, and maybe a couple other core primary retailers for them.
And I can imagine marketers that aren't using Sky, if you might don't mind me saying, because we do make it easier than most. But yeah, I can imagine looking at these things and seeing what you're getting. And we, in our state of retail media survey, we always ask these questions, what will accelerate your spend and what makes you want to spend with other networks? And over the years, we keep seeing the same answers that marketers are interested in the portfolio approach. They do see a value of some of these specialized. I mean, if you're a beauty, brand, so Sephora's retail network, Ulta's network, all these different ones. But what they seem to want is more of the capabilities and features that the Amazons and Walmarts offer. And the problem is they're so light years ahead. I mean, just think about Amazon Marketing Cloud. Just think about Amazon DSP. It's just hard for some of these smaller retailers to get there.
And if you think about a small regional grocer or convenience store chain, they have a lot of information on their clients, on their consumer, or sorry, their consumers, but how different is it from what Walmart or Amazon probably knows about that same consumer? It's where the value, I think, is very much what's the audience that's coming to their website. So whether they're shopping online or planning a visit, that on-site audience is something they own. That's very exciting, but the offsite becomes a little bit harder to think about relative to some of those large giants. And yes, you're right. I will give one shout out right now. We also find Celeste, the AI that Sky's built, very helpful for managing across and answering some of the questions. So I said I wouldn't give you guys a shout out, but I'm definitely giving you a shout out here for how time saving that can be for us.
Much appreciated, much appreciated. You know my feelings on that. So, but I appreciate you. To me, as a marketer, portfolio approach makes the world of sense. I remember being an early paid search person, and everyone was on Google. People weren't touching Microsoft, and we went to Microsoft. There was less competition, lower prices, and just as much value there, if not more, depending on certain categories. So I'm rooting for the others. If you're out there, if you're listening, please do what you can to satisfy and talk to the clients, talk to the retail media marketers, see what they're looking for. You might not be the fact that they just love Amazon and Walmart a lot, although they do, but it just might be the fact that you're not giving them a few things that they need, some data, some, like you said, some offsite audiences, things like that, that might be able to bridge that. But I think as the Amazon Walmart auctions start to saturate, we will see more marketers interested in what the other retail media network can drive at a much, much lower cost. And say, hey, if you can get 4 or 5, times the eyeballs for the same amount of spend, that's going to get pretty interesting. So looking forward to seeing that number go up just for the health of the industry. Across all retail media, we see, there's a few different ad formats. When we say sponsored products, actually, that includes sponsored brands. And then, of course, display. These things are indexed, so it doesn't mean that offsite display DSP is being people are spending more. It just means that when you look across the growth, the growth is just much higher into DSP. And offsite just continues to grow. It's one of the biggest things that we're hearing. We're asking a bunch of questions about offsite in this year's State of Retail Media Network, State of Retail Media study that we're going to be putting out in January. Will, what's driving this offsite interest?
It's absolutely where the retailers are putting a lot of their efforts, both in the products they're building and in the sales team's focus. Without naming any names, some retailers almost seem to no longer want to speak to us about on-site search and instead focus on what's happening off-site. And it makes sense because non-endemic is, for a lot of these retailers, an untapped market. And even for ones that have very healthy spends with non-endemic, it's the fastest growing areas. It's for a lot of retailers, the largest spends are actually coming from non-endemic brands that are looking at it very differently than an endemic might. So if you're a travel company, a cruise ship company, whatever it happens to be, there are signals that can come from these retailers that might be really exciting and engaging and that they're very much looking to take advantage of. So non-endemic is going to continue to, I think, through 2026 be the largest growth area. And because of that, offsite display is going to continue to be the largest growth sector.
And in terms of the clients you deal with, I mean, are they big spenders in this area?
Absolutely. And increasingly in pitches that we're in, we're seeing brand teams that a couple years ago might have thought that spending on retail media networks was just for the sales or the customer teams. Now they're getting a lot more excited. They're asking much more detailed questions about what retailers can bring and how they can be involved. So it's absolutely, I know we keep talking about the maturity of retail media networks, but it is hitting critical mass where it's no longer a small team that's thinking about it at all of these different brands, but now it's become part of how the marketers are thinking about their complete full funnel.
And when you think about some of the advertisers that are non-CPG, I mean, some giant, giant advertisers in the insurance, the fin services category, auto, just travel. There's so much money that retail media networks could bring in, and I could see this offsite just being such a big. Right now, still around 80% of all spend is going to the sponsored brand, sponsored product, sponsored video, sponsored display. But certainly, as those things hit critical mass, we're going to see the offsite grow more, just like we saw programmatic grow in the late 2000s as search inventory and social inventory started to cap out. You can go and spend a ton on programmatic. And then CPC across these things, we already said CPC was kind of flat, and was and which is a good thing. But if you wanted to see how it looked quarter over quarter across these different ad formats, here you go. Jumping directly into Amazon, as you can imagine, some of the top line KPIs look very for retail media look very similar to Amazon's top line KPIs because Amazon is such a big part of retail media. Um, 22% up in clicks, 23% up in spend, and conversions following along there. And then Amazon formats a bit similar to what we saw the growth level across retail media, of course, for the same reason. But DSP, I mean, Amazon DSP, where are those budgets coming from that are driving Amazon DSP spend?
Some of it is absolutely coming from the more traditional budgets, the shopper budgets, but really that big growth is coming from brand marketers. So, depending on how an organization is set up, we still very generally see a difference in budget between that sales and customer side and the brand side. And this is brands getting much more excited in what Amazon's doing. They're looking at what's happening on Twitch, they're looking what's happening with Prime Video, they're looking at live sports, and they're finding ways to get involved and start dipping into it. And when I'm speaking with Amazon these days, it is very much about how they're making inroads with the brand teams, and we're seeing it. This is exactly the proof that their shift in tactics of dealing with clients and which clients they want to talk to is paying off with how spend is changing.
Yeah, the opportunity is there, and it's already. I mean, remember 2 or 3 years ago, I saw this e-marketer chart that it was already like the second biggest DSP, behind some of these things that have been around for almost 20 years, 15, 20 years. So that just tells you how fast it's growing. And then CPCs across. I'm going to speed up a little. We're getting a little bit behind here. What Speaking of Amazon DSP, we're seeing adoption grow across our clients. Walmart, we're seeing sponsored brands, sponsored products continue to grow, and the adoption across sponsored brands, which is something that we've been tracking. I don't know if we're going to continue to track it, but when it came out, it's been out just for a little while, for a few years, and so we were tracking it as it goes. But it looks like it's kind of like become what everyone's using as well, and CPCs too. In fact, going down a little bit on sponsored brands. So for those of you out there that are looking for an opportunity, maybe sponsored brands on Walmart as some place to look. By industry, not going to go through these. You can go through it in the report. The vertical axis here is spend percentage year over year, and the horizontal are clicks. So you can see some of the ones that are spending more. If you're over this line, you're spending more. If you're over this line to the right, your CPCs have gone up. Actually, your clicks have gone up, and then spend, as I mentioned earlier, health just seems to be a big category that's popping across retail media and search. All right, what can we learn from Prime Big Deal Days? Again, not technically part of Q3. Don't want to fly too far through this, but there were some things, as you can see, average order value was a little slightly lower than what we saw in previous years because some of the top categories, household essentials, health and wellness, not the consumer electronics and other things that we saw in some of these big deals. We also saw a lot of comparing prices. Remember, we mentioned the halo effect. So people were checking out Amazon, but also Walmart and Target. And the surprisingly, only 23 purchased holiday gifts, showing that there's going to be a lot meat left on the bone here for the rest of the holiday season in Cyber 5. Some of the things that we saw in our data, once again, these were advertisers that were spending on Amazon ads both in 2024 and 2025. We did see a slight increase in spend, not the big double-digit increases we've seen year over year, but still up. Engagement surged um, to 74%, a 74% climb in click-through rate from 0.22 of 2024 to 0.39. That's a pretty amazing pitch. Um, Anecdotally, I mean, well, some retail media marketers were a little tepid about the return numbers. Why is that?
I think that the return numbers make a lot of sense. There's obviously economic uncertainty going on right now, and people uncertain about what's happening with prices, people concerned about their own ability to spend. You also had a big Prime Day in July that people did a lot of shopping at. You've got Black Friday and Cyber Monday coming up not too far away, and people are thinking about will they be able to get better prices there and waiting. And I think that that's led to the both the AOV decline and that essential strength. And that's exactly what we saw with the essential strength is for this Prime Day, people were stocking up on deals of the products they already had to buy, but anything that you mentioned consumer electronics, or we saw that fewer people were buying gifts, anything along those lines, people were just waiting and knowing that there are going to be more opportunities to buy and potentially better deals coming in about a month and a half, and I think that's reflected.
Interesting. Some of the lessons, I'm just going to skip this. Like I said, we're a little bit behind. We've been having, going through the commentary here, but one of those big tips is find some way to boost basket size. Now, that's not something that marketers can always have an impact on, but that might be a big part of your strategy here in Q4 if you haven't thought about it now. What can you do maybe to boost your order size, accessories, product selection, etc. We're going to skip through the paid search and social advertising section. I'll hit on the highlights here. Spend was up nearly 10% in paid search. We saw, of course, as we usually do, some advertisers spend a little less, some advertisers spend a little bit more. Spending did go up. So as we see it ramping up for the holiday season and starting to try to get some of their big ticket items into people's minds and their awareness. So we saw that move. And then search spend and search CPC. Um, yeah, like I said, you can find that out in the report next week. Performance Max continues to be adopted by our clients and probably from the industry wide. Paid social was up double digits, up 11%, which is really good to see. TikTok, as we talked about, up, share of wallet up, adoption up, so forth. And then for paid social, jobs and EDU really were one of the bigger spender hikes, both in terms of total spending and CPM. And then same thing across total costs. All right, wanted to get to our AI section. We just started this last quarter. AI is just becoming so big and it's innovating so quickly and evolving so quickly. We knew that we wanted to just touch base and touch in every quarter and kind of share what we've learned, see what is out there, and then see how we can help marketers make sense of it all. One of the big reports that popped in my inbox about a couple months ago was this MIT report. 95% of all generative AI pilots at companies are failing. 95%, Will, that's everybody. So might as just well said everybody is finding pilots. What do you think? Why do you think? There's some things that said in the article, but what are you seeing on your side?
So I think people are in some cases asking the wrong things of AI. AI can solve a lot of problems. It can cut through data very quickly. It can find things in your inbox, which might sound like a very basic use, but that has saved my team so much time. And I think right now people are expecting it to be replacing employees. And that's where I anecdotally hear about a lot of the pilots that are failing, where it's not replacing tasks and finding efficiencies, but ultimately trying to be much bigger than that. And we're in the infancy of AI. It's about individual tasks at the moment. It's about freeing up a couple hours from your employees a week so that they can be focused on more strategic, bigger thinking. I think that's where the success is. The failure is because people right now are looking at the word intelligence in it and leaning too much into thinking this is HAL and not, at the moment, it's essentially a smart helper bot.
Like that, like that. Just a question. I'm just curious. I'm sure every organization is struggling with trying to encourage their users, their employees to use AI more. They're probably also trying to figure out which initiatives to invest and to roll out. Everything's moving so quickly. There's not been a time to pause and say, "Oh, okay, now this is what we should be doing." It's just going up and up. But just any thoughts on how you encourage your team to use AI more, to just to be thinking about, the use of AI more in their daily activities?
Absolutely. So I mentioned even just helping find documents and reports, which it's amazingly brilliant at. Um, where we're getting more advanced is actually creating a lot of those reports and understanding what happened in data. And if we get an ad hoc request from a client about why did this product spike or why did CPCs spike on this day, AI can generally answer that within seconds, where it used to take quite a bit of time for someone to dig into. And now AI is still going to hallucinate. That's still a little bit of a problem. So it's not like you can just bottle up that answer and ship it out. But what it gives you is a really strong starting point. And where we do see hallucinations, we dive into understanding why that's happening and how we can make the AI smarter about it. In the very near future, there will be decision making based upon what AI is seeing. Right now, AI needs a little bit of hand holding, but absolutely, I have my team start with it when they're doing research, when they're solving problems, when they're looking into all of that data and trying to figure out what trends are happening.
We did a webinar. I did hosted a webinar with our chief product officer, Guy Cohen, a couple months ago, and I think his was really good. It's this kind of this bottom up and top down strategy. So from the bottom up, encouraging your teams to use AI, to get involved in it, and share with each other what they're seeing, what tools they're using. And then from a top down, being very more cautious about which initiatives to bring in, which pilots to bring in, what investments can help the entire team, and what's real and what's not. We're so quick to jump in. There's so much opportunity and potential with AI that companies are jumping in as they should be. But yeah, to see that, and I don't know how MIT defines failure, but certainly that's a big number to look at and why it caught my eye. You can go and read that article. Here, let me just show you again. Just search for the Fortune article and you can read what's more in that article here. So we do have, as you mentioned nicely, thank you. We do have our Celeste AI here at Sky. It's the first Gen AI market agent purposely built for commerce media, and we think that's the difference, right? You have general AI, which is like your Chat GPTs and Claude's, really great, and then you have your specialized AI, and because of that, we can reduce hallucinations because we're not on this giant data set. We're on your data set, and Celeste knows what your data means, what the context of what an impression is, and why it matters, and if it goes up or down, if that's good or bad. Shared with you last quarter the kinds of prompts. I don't get to see the individual prompts of our clients. That's all black box to the company, but in aggregate, I can see kind of the categories. Let's look at Q3 and before we go to Q2, and we can see that there's three areas that are 85% of all the prompts. We're talking thousands, 10,000. I forgot how many prompts there were in the quarter, but mainly strategy and planning, campaign setup, and performance and pacing. This is something that you actually mentioned about what they're smart at. What we see the difference between the Q2 when we compare it is these three areas: specific questions about the brand or the products, creative and then platform usage and troubleshooting. Seems like marketers are starting to get the message of where AI works best, what it's best for. Sure, it's a small sample size here of Celeste users, and Celeste is a very specific tool for helping marketers make sense of their data. But, what do you make sense when you see that really the bulk of it is these kinds of prompts?
I'm a little surprised creative and messaging direction is such a small part because, again, it's so easy to ask Celeste a question and immediately get some data back that would take someone a couple hours to set up the report for. And creative messaging and direction is it's an area that takes a lot of time that Celeste cuts through.
And hey, just speaking for Sky, I know that we're building things toward our various creative tools. We built so many creative tools over the last nearly 20 years of our existence. And I know we're going to be tapping into that too. But certainly, as these prompts and what I'm hearing anecdotally from the clients that I'm speaking to, they're finding a lot of opportunity and savings. Like you said, things that they would have normally done that might have taken them 15, 20 minutes, half hour, they can get in seconds. And that's really the value. So AI and its impact here on Q4, I saw this chart that I also wanted to share. It's from Salesforce.com. It showed that 19% of 2024 holiday e-commerce sales were AI influenced. It's a bit of loose definition of what was AI influenced. I went to Salesforce's report, and it did say anything that's like, that was recommended, suggested, as well as targeted. So it is a little loose, but it's an interesting metric to follow year over year. And we're going to see that same like double digits. What's your reaction? 21% this year. And what are you going to recommend to your clients when 1/5 of all e-commerce sales for the holidays are going to be influenced by AI?
Absolutely, they need to be building AI into their strategies and thinking about, as I mentioned earlier, how the content they're creating not only speaks to humans, but speaks to these agentic AI systems and how they can make sure that their product detail page is going to be what Rufus is looking at when someone's typing a query that's going to be AI driven, or how they make sure that they're at the top of what Google's putting on a product search if someone's typing what's the best pair of shoes for someone that's working in a hospital or whatever it happens to be. It becomes a very different way of thinking about how you're reaching that audience, a very different way to think about affiliate, to think about just content creation in general. And this is where we're really trying to get the marketers we work with to think about the future.
Yeah, you got to really think not incrementally like how are things getting going to change month over month. You got to almost think 2 years from now, where's the world going to be in an AI shopping universe, and then what to do from there. For more on this, I want to point one of my colleague Jason, who's our VP of Product Marketing, wrote this awesome piece about funnel to tunnel. This idea that the customer journey, has been days, weeks, months, sometimes even years, and traditionally, and that's now getting collapsed, that you can walk into a tunnel, the AI tunnel, not even knowing what you're thinking about, not even knowing how you're going to solve your problem, and by the end have gone through the entire process, awareness, discovery, you know um, nurture, all these kinds of things. And while he put it under the context of programmatic retail media, which he feels very strongly that it's kind of a way for marketers to address this issue, you need faster marketing in a sense to deal with the collapsing of the consumer tunnel. It's just a really good article. Here, I'll just show it again because we're kind of running out of time here, so I won't be able to go through the different points. But just search on, for Sky from funnel to tunnel. Jason Wolfson's article, really cool. Once again, under the context of programmatic retail media, but the concept of this funnel to tunnel is really cool. And we also have some tips, which I'm going to pass on because these will be in the report verbatim. In fact, we're using even the slide layout because for the AI section, I always try to use AI images. So this was shopper entering AI tunnel, bypassing traditional retail media, et cetera, paid search and paid social. But just this idea of where the marketer role is in an AI shopping world when the consumer journey is collapsing, search is changing. It's something it's something a lot of marketers don't even want to think of because it's such a big problem and challenge to consider, as well as we don't know where some of these things are going to land. but certainly you should have a POV on this, and this should be something that you're talking to your peers about. All right, looking ahead here, we've got busy 3 months ahead, huh, Will?
The busiest as always.
Yeah, November shopping, which is different than December shopping, right? Cyber Five's its own little breakout area, and of course New Year's and beyond. And I love the thought that the holiday season, we always talk about how it's extending forward. November 1st used to be the day. Now it's in October. Eventually, people are buying holiday gifts all the way in July for Prime Day, thinking ahead. But also thinking of it past December. A lot of times people think, oh, the last ship date or whatever is that's the end of the holiday season, but actually New Year's is part of that, and I would love to see marketers kind of approaching it that way. Cyber Five last year. Let's see where we're at time. Oop, we're not at what time. This is in the QTR report. Oh, there's my alarm that we're getting. So just know it was a good QTR. This shows the spending all the way from November 1st, and you can see the bump up in retail media spending, and you can learn some things from it. Another AI image, generate a Cyber 5 tips neon sign, photorealistic. It kind of wasn't very holiday seeming, but some good tips here that you can find in the report. All right. I wanted to address some of the questions that came in. We grabbed some questions when people were even signing up for registering for the webinar. We have time for one or two. Will, I'm going to throw these right to you. How does decreasing traffic to websites impact ad spending? How is Q4 thus far?
I think it's actually increasing ad spending because brands are realizing that it might be a decreasing pool that they need to attract, and therefore they're willing to spend more because each of those consumers is going to be more valuable relatively. I don't think we're going to see the full impact of decreasing website traffic this year by any means. It's only something that's in the back of minds more than something I think that's being directly planned for. But this time next year, that question's going to have a very different answer.
And we're seeing, less clicks away from Google's search engine results page. That's impacting especially publishers that really relied on Google traffic. So they might have to supplement that traffic using ads here. Oh, exit poll just popped up because we're almost done. Last one. How should brands strategically balance the increasing cost of on-site sponsored listings with the surge in Amazon DSP spend?
And this is very much about setting up each campaign that you're planning around very specific goals. Are you looking to drive revenue? Are you looking to drive sellout? Are you looking to gain additional share? By being very specific about the tactics that each of those campaigns are going to achieve, you can make better choices and better impact what's happening. I think I'm being cut off, I know, but ultimately don't go after just ROAS because that's where you're going to get locked and where people can even game ROAS. Be very specific about the goal of every campaign you're setting up and what you need it to drive.
Great words, especially going into Q4, and hope that everyone has a great Q4 out there. Finally, just a reminder, if you like this content, you can find the previous QTRs on our QTR page and in our research center, along with all sorts of other great research that we look through. You'll get a link to this recording email, as well as a link next week to the quarterly trends report when it gets put out there. And I just want to say thank you, Will. Thanks. Great having you today. Thanks for your commentary, and you're on the streets. I'm sitting here in an office trying to make sense of this stuff, and you know what's going on. So thank you so much for joining us.
Yeah, thank you as well.
All right. Appreciate you guys. I know my colleague Julia would love if you fill out that exit poll, excuse me. And we will see you for the next one. Have a great Q3. Have a great Q4. Have a great New Year's. We'll see you in Q1, and we'll wrap up what happened in Q4. Cheers.